You are exhausted. Not just physically tired, but that deep bone-level exhaustion that comes from carrying too much for too long. You wake up before your alarm, your mind already racing through the day ahead, meetings, deadlines, responsibilities, and somewhere in the back of your head, that quiet, uncomfortable thought you keep pushing away. The one that asks, am I actually building anything for my future, or am I just surviving right now? That thought is not weakness. That thought is wisdom trying to get your attention. Here is what nobody tells you when you are grinding through a demanding career. The very skills that make you exceptional at your job, the hustle, the long hours, the constant availability, those same skills can work against you when it comes to building real wealth. Because the investment strategies most people try to use require time you simply do not have. They require constant attention, daily monitoring, the ability to react to market movements in real time, and you are already stretched past your limit. So let me ask you something honestly. How many times have you told yourself you would figure out investing when things slowed down? How many times have things actually slowed down? Right, they never do. The calendar fills back up. The urgent always beats the important. And another year passes while your money sits in a savings account earning almost nothing, quietly losing value to inflation while you are too busy to do anything about it. That gap. The gap between where your money is right now and where it could be. That gap costs you more every single day that passes. Not just in dollars, in options, in freedom, in the ability to one day choose how you spend your time instead of being told how to spend it. Now, before I go deeper, I want to mention something. We have a program linked in the video description below. If you are the kind of person who is serious about actually implementing what you are about to learn, not just watching and forgetting, then you might want to check it out sooner rather than later. Most people who watch videos like this nod along, feel motivated for about 20 minutes, and then go right back to doing what they have always done. If that sounds familiar, this program is not for you. But if you are the rare person who actually wants to change your financial trajectory, it is there. We will talk more about it at the end. Right now, though, let us talk about the strategy that genuinely changes everything for busy professionals. And it is not complicated. That is actually the point. Imagine two people. One spends 5 hours every week actively managing their portfolio, buying individual stocks, watching charts, reading analyst reports, feeling smart when things go up, feeling sick when things go down. The other person spends about 30 minutes setting up their investment approach once, makes a small, consistent adjustment every few months, and then gets back to their life. After 20 years, the evidence is overwhelming. The second person almost always ends up with more money and dramatically less stress. That is the index fund strategy, and it is not a secret among the people who truly understand how wealth gets built. It is the foundation. Here's what an index fund actually is, stripped down to its simplest form. Instead of buying one company and hoping it succeeds, you are buying a tiny piece of every major company inside a basket. When the entire market grows, your money grows with it. When one company fails, it barely matters because you own hundreds of others. You are not betting on a single horse. You are betting that the race itself keeps happening, and historically, across every decade, the race has always kept happening. The S&P 500, which tracks the 500 largest companies in the United States, has averaged roughly 10% annual returns over the long run. Think about what that means practically. If you invest $1,000 and never touch it for 30 years, that money does not just double once. It grows to nearly $17,000. Not because you were clever, not because you had time to monitor anything, simply because you put it in and left it alone. But here is where it gets even more powerful. Here is where the real magic lives. Imagine instead of putting in $1,000 once, you invest a consistent amount every single month, a few $100s, whatever you can genuinely commit to without feeling it. This approach is called dollar cost averaging, and it is the single most time-efficient, psychologically intelligent investment behavior a busy person can adopt. When markets go down, your regular contribution buys more shares. When markets go up, your existing shares are worth more. You win in both directions over time. The person who has been doing this consistently, just putting in a few $100s every month into a low-cost index fund for 15 years, often ends up with far more than the person who tried to be clever. More than the person who was constantly trading. More than the person waiting for the perfect moment that never came. And here is the painful truth about waiting for the perfect moment. Research consistently shows that missing just the 10 best trading days in any given decade can cut your total returns nearly in half. Not missing a year, not missing a month, 10 days. You cannot predict those days. Nobody can. The only way to capture them is to already be in the market when they happen. The strategy of doing nothing, staying invested, turns out to be one of the most powerful active choices you can make. Now let us talk about the emotional reality of this, because the numbers only tell part of the story. Picture yourself 5 years from now. Same career, same pace, but every month a quiet, automated process has been building something in the background. You look at your investment account and it looks different. It looks real. Not because you sacrificed your weekends or became a financial expert, because you set up something simple and consistent and trusted the process. That feeling, that specific feeling of watching compounding work in your favor, it changes something in you. You stop feeling like you're always one bad month away from trouble. You start feeling like someone who is genuinely, measurably moving forward. Contrast that with where so many busy professionals actually are. Feeling like they should know more about investing but never having the bandwidth to learn. Feeling a low-grade anxiety every time they think about retirement. Watching years pass while the decision to start keeps getting postponed. That postponement is not laziness, it is overwhelm. And overwhelm is completely understandable when you are carrying everything you are carrying. But here is what makes the index fund strategy perfect for exactly where you are. It requires almost no ongoing time. Once set up, it essentially runs itself. The costs are dramatically lower than actively managed funds, which means more of your money stays working for you. The data across decades consistently shows it outperforms the vast majority of professional fund managers. Not occasionally, consistently. The people whose entire job is picking stocks typically cannot beat the index over 10 or 20 years. You, doing almost nothing, frequently beat the people doing everything. That is not an accident. That is how markets actually work. Every piece of information about a company is already reflected in its price the moment it becomes public. No one has a consistent edge. The index does not try to have an edge. It just owns everything and lets time do the work. Let us talk about fees for a moment, because this is the hidden villain of most investment accounts and it deserves a dramatic entrance. Imagine you invest $100,000. One fund charges you 1% per year in fees. Another charges you 0.1%. After 30 years accounting for investment growth, the difference in your final balance is not $1,000. It is not even $10,000. It can be the difference of over $100,000 in real money that either went to you or went to someone else. Index funds are famous for their incredibly low fees. This is not a small detail. This is potentially the most expensive mistake you never knew you were making. The cost of inaction has a number. The cost of the wrong strategy has a number. Both of those numbers are large and they grow every year you wait. Now there is something worth addressing directly. Maybe you have heard of index funds before. Maybe you thought, okay, that sounds smart, and then nothing happened. Or maybe you started but stopped. Or maybe you are not sure how to choose the right funds, how to structure your accounts for maximum tax efficiency, how to set up automatic contributions, how to actually do the thing rather than just understand the concept. That is the gap between knowing and doing. And that gap is where most people live permanently. They know enough to feel like they should act. They do not know enough to feel confident acting, so they stay frozen. Meanwhile, every month that passes is a month of compounding they will never get back. The people who actually build wealth with this strategy are not necessarily smarter than you. They are not necessarily earning more than you. What they did differently is they crossed the gap. They went from understanding to implementing, from intention to automation, from someday to this week. That crossing changes everything. Now, I promised you I would come back to the program in our video description. Here it is. What you have learned in this video is the foundation, the framework, the why. But the why, as powerful as it is, does not open a brokerage account for you. It does not build the specific structure that fits your income, your tax situation, your timeline, your goals. The program below does exactly that. It walks you through implementation step by step with a kind of clarity that eliminates guesswork and eliminates the delay that most people call doing more research. Most people who tell themselves they are doing more research are actually avoiding the discomfort of starting. The program is not for those people. It is for the person who is genuinely ready to stop watching their future wait. If you are that person, you already know it. The link is below. Do not leave it there unopened the way you have left this decision before. This time, let today be the day that is actually different.